Did you know that there are 13 life insurance terms you must know in 2025 that could save you a lot of money and headache? Wait, what? Why? This is why.
Ever read a life insurance policy or tried to apply for life insurance and felt you needed a dictionary? You're not alone. Life insurance terminologies can be confusing, but understanding these terms is the key to making the right decision in securing your family's future. Life insurance is super important these days, especially with all the crazy stuff going on in this world. It's like a safety net for your family if something unexpected happens. But let's be real, life insurance policies can be confusing with all the complicated words and jargons. It's like trying to navigate a maze, and it can be overwhelming for a lot of people. My name is Shemaiah Davis, and I have been a licensed insurance agent for the past 6 years, specializing in life insurance and Medicare insurance. Please hit that subscribe and notification button if you want to see more videos like this, and if you find this information educational and informative. Now let's dive in.
1. Policy owner. The policy owner is the person who owns the policy and makes payments on the policy. This can be an individual or an entity, a company, church, charity, etc. The policy owner is very important because it determines who controls the policy, like adding or removing beneficiaries or accessing any cash value available in the policy. 2. Insured. The insured is the person upon whose life is insured under the policy. Note that in most cases, the policy owner and insured are the same person. However, the policy owner does not have to be the insured. In cases where the policy owner and insured are different, the policy owner must demonstrate that he, she, or they will suffer a financial loss in the event of the insured's death. 3. Beneficiary. The beneficiary is the persons or entity that will receive the payout after the insured death. I call this your VIPs, the people, pets, estate, trust, or charities you want to take care of when you are not here anymore. Many life insurance policies will allow you to specify how much you want to leave to each beneficiary. My advice is the more you specify, the less fighting, arguments, and confusion there will be amongst your loved ones. 4. Death benefit. When you hear the phrase death benefit, this refers to the sum of money that the insurance company pays out to the designated beneficiary or beneficiaries when the insured person dies. 5. Premium. The premium is the amount you pay to keep your policy active. Sometimes premiums can be paid monthly, as a recurring charge through your bank account, quarterly through a check or a recurring charge, annually through a check once a year, or a one-time lump sum payment. Note that there are many factors that will impact the amount of premium you pay. Factors like your age, health, occupation, geographical location, and policy type. 6. Cash value. Note, this only applies to permanent life insurance policies. If you don't know what a permanent life insurance policy is, please check out my previous video about life insurance for beginners in 2025. The cash value is where a portion of your premium payments are invested by the insurance company and accumulates over time, creating a cash value that you can access while you are still alive, either through withdrawals or loans, while still maintaining a death benefit for your beneficiaries. However, if you do not return the withdrawals or loans back to the policy in a timely manner, this can lower your total amount of death benefits you originally wanted to leave behind for your beneficiaries. The insurance company will subtract the withdrawals or loan amount from your total death benefit. In some cases, you will be charged interest until you return the amount you took and withdrawal fee for taking the money out. So please talk to a financial advisor or a licensed insurance agent like myself before taking money out of your permanent life insurance policy. If you have further questions about cash value in a permanent life insurance policy, please feel free to click the link below to schedule a 15 minutes call with me. 7. Face amount or face value. When you hear the phrase face amount or face value, this refers to the total value of the policy or the amount of money paid to the beneficiary or beneficiaries when the policy expires or when the insured person dies. Wait, hold on. You just said the same thing about death benefit. Yes, folks, the face amount or face value is the same as the death benefit in most cases. So why are they phrased differently? Well, this is because they are slightly different in certain circumstances. Example, the face amount or face value may be lower than the death benefit if a policy owner withdraws or takes a loan out against the policy cash value. For example, if John's policy has a face value or face amount of $300,000 and a cash value of $100,000, and then John, the policy owner, decides to take out a $50,000 loan to pay for a much-needed new roof, but John never paid the borrowed $50,000 back to his policy, John beneficiaries would only receive $250,000 upon his death as a death benefit benefit, even though John's face amount is $300,000 on his policy. 8. Underwriting. The term underwriting refers to the process the insurance company uses to determine your risk and how much premium will be charged for the coverage you are applying for. What affects underwriting? Age, health history, lifestyle, occupation, and location. This includes examining your medical history, asking you health questions, and requesting you get lab work completed in some cases. 9. Rider. A rider is additional benefits added to a policy for extra coverage or various provisions. In most cases, they are an additional cost added to the premiums of a policy owner for the rider. Here are some of the most common riders you should be aware of in 2025. Waiver of premium rider. This rider waives your premiums if you become disabled and can't work. Accelerated death benefit rider. This rider allows you to collect part or all of your death benefit while you are still alive if you're diagnosed with a terminal illness. Long-term care rider. This rider allows you to receive your death benefits while you are still alive if you have a chronic condition that prevents you from completing everyday tasks and requires you to be in a long-term care facility. Cost of living rider. This rider gradually increases your death benefits to account for inflation. And lastly, guaranteed insurability rider. This rider allows the policy owner to increase the death benefit at a later date without having to go through underwriting again. 10. Grace period. This refers to a set amount of time after a premium is due when a policy owner can make a payment without getting their coverage canceled by an insurance company. The length of grace period varies amongst insurance companies, however, it is usually 30 or 31 days after the payment is due. 11. Lapse. This term refers to when your policy is no longer active or has been canceled by the insurance company due to missed payments. Insurance companies will usually provide a grace period with various attempts to collect the missing premium through mail or calls to notify the policy owner before the policy is canceled. 12th, non-forfeiture option or clause. This term refers to the provision included in certain life insurance policies that states that policy owners will not forfeit the value of their policy if the policy lapses or is canceled after a defined period due to missed premium payments. Most insurance companies will provide this clause to you at no extra cost, and in most cases you have 3 options to choose from. Cash surrender value. With this option, the insurance company will pay the cash value of the policy to the policy owner as a lump sum, and then the policy is canceled. Extended term option. This allows the policy owner to use the cash value of the policy to purchase a paid-up extended term insurance. This will eliminate your premium payment for the lifetime of the new policy. The amount of cash value will determine how much extended term coverage you get. Please check out my previous video if you don't know what a term insurance is. Reduced paid-up insurance. This option allows the policy owner to buy a paid-up policy of the same type of the policy that lapsed with the cash value. This option will eliminate further premiums payment for the life of the new policy also. The amount of cash value will determine how much reduced paid-up coverage you will be able to get. 13. Contestability period. This term refers to the period, usually 2 years after coverage is approved and granted, during which the insurance company can investigate claims filed on a life insurance policy. It is very important to be very honest and accurate when applying for life insurance because claims can be denied if there is evidence of fraud. The insurance company will not pay the death benefit if they find out you or your agent lied on the application. In most cases, they will return the premiums that you paid over the years to your beneficiary if they investigate and determine that you lied or committed some type of fraud on the application upon your death.
And there you have it, folks. Navigating the intricate world of life insurance can feel like deciphering a secret code, but understanding its terminologies is crucial in making informed decisions to safeguard your family's future. Each term, like a piece of puzzle, contributes to the bigger picture of your financial security. The more informed you are about life insurance, the more empowered you will be to protect your family's future. Knowledge is the first step towards financial security. If you need help understanding life insurance terminologies or have any questions concerning life insurance, don't hesitate to speak to a licensed insurance agent like myself today by clicking the link below this video to schedule a call with me. Please like, share your thoughts in the comments below, and hit that subscribe button if you find this video educational and informative. And hit that notification button if you do not want to miss my next video, which will be discussing how to qualify for life insurance with pre-existing conditions. Thank you.